Hi everyone, let's go through my preferred and alternative bullish and bearish high time frame, medium time frame and low time frame scenarios, including potential trading setups. Starting with the bearish and preferred scenario on the high time frame, where this is a WXY with in the X and ABC expanding flat, currently looking to end this wave 5 to the upside in a 1, 2, 3, 4, 5. After wave 4 bounced perfectly on the 0.5 pip, taken from the low of 2 to the high of 3 for this trading setup, triggered all the way to the most common target area. And you can see I traded specifically over here till the high time frame range value area low, because yes, it is that time where now I have this volume profile on my chart, which basically shows the volume of this range over here. And as you can see, this is the value area low. This line in the middle is the point of control sitting at 38.7, and this line, the lower line, is the value area low. And these levels act as a very important support and resistance area on the higher time frame. Now, when we then look at where wave C might end, well, this is the most common wave C target area. And as you can see, we now hit the minimum target for this most common wave C target area over here with the 1.618 at about 27.7K. And the maximum target of this most common wave C target area is 34K. On the left side, you see two Fibonacci pulls over here. These are pulled from the all-time high to the low of W, and these are for the red wave X, because wave X usually hits as a minimum target the 382 Fibonacci, currently sitting at 29.6K. So that is also an important level. And when we look at wave 5 specifically, the Fibonacci that you see over here, the 1.618, is a target for a wave 5 pulled from the high of 3 to the low of 4. However, we don't know, we're in a bullish environment and price might just push to the upside, and we still have a rare wave C target up here all the way to 40K, which also then includes the high time frame range point of control as very important resistance. So for the potential short setup for a swing trade, this is very important to keep into account for the potential stop loss and the size of your potential trading shorts over here that can be laddered inside the most common wave C target area with the stop loss somewhere above, and then eventually trading it for wave Y to the downside, where if we look at wave Y, the first target at the moment is about 12.8K, which also has a nice confluence with this area that we never backtested after the bull run in 2020. However, wave Y does have lower targets, as you can see, but the first minimum target is the 0.618. And then finally, what I do want to say is if we look at the impulse, the 1, 2, 3, 4, 5, we can see very nicely that in wave 1 volume was good, in wave 2 volume dropped, and then in wave 3 volume started to go up, and so far the highest volume was in this wave 3. Wave 4 volume moving to the downside, and then at the end of wave 4 in this move up, volume starts to pick up, but it is lower than wave 3, and usually you see that wave 5 has lower volume than wave 3. So this at the moment looks very nice in an impulsive move to the upside. Now the bullish scenario on the higher time frame, which currently for me is my alternative scenario, is the following. We have a WXYXZ, which is a 3-3-3-3-3 type of structure, Z ending at the 0.618, that is pulled trend-based fib extension from the high of W to the low of W to then the high of X, which is a rare target for wave Z, as the most common targets are over here. So the rare target of wave Z has been reached. Okay, it's rare, but it's possible, right? However, wave X also didn't even retrace to the 0.382 fib, which usually is a minimum target. And that is the reason that for me this scenario is an alternative, because we have wave X not hitting the 382 and Z hitting a rare target. Makes me think twice, you know, like, okay, might be an alternative scenario then. And then when we look at the move to the upside, I just mentioned that the volume of this impulse is looking very solid for an impulsive structure, with 3 having the most amount of volume. Now in this scenario, the bullish scenario, the low over here is not a wave B in a ABC expanding flat, but it's the end of Z, and this is the beginning of a big bull run to the upside. In this scenario, we are waiting for this wave 1 to finish. Again, the high time frame range value area low is very important, it's a very important resistance area, 28.8K. So that could be a very interesting area indeed for then potentially a move to the downside for a wave 2. The most common target for a wave 2 is the golden pocket at basically the 618 and the 66 Fibonacci, pulled from the low of Z to then the high of wave 1. However, the target area, the most common target area for wave 2 are these fibs from the 0.5 till the 0.786, with the 0.886 and the 382 being more rare for a wave 2. Eventually then a potential trading setup is shorting from around the range value area low, stop loss somewhere above, shorting it to the downside. However, this is educational and this a potential trading setup because we are in an impulsive structure, and I write risky for a reason, because shorting in a bullish environment is risky. So make sure to manage your trades, have your entry requirements and strategy ready, and only when everything fits your strategy, you enter a potential trade. Then on the medium time frame, I'm looking for a bullish and a bearish scenario, with then the bearish scenario being that this is the end of wave 4 then on the high time frame, and we have a 1, 2, 3, 4, and now we're working on wave 5. Now then, in this wave 5, if we look at wave 5 targets based on this structure over here, which then is a 3 and a 4, then we are currently in the wave 5 target area, which then basically means that this blue wave 5 would be finished, therefore the green, and therefore the bigger C, and therefore the even higher time frame red wave X that I showed earlier on the high time frame bearish count. So this area is also very important. It's the 1.236 and the 1.68 pulled from the high of 3 to the low of 4, currently sitting at 27.2K, and the 1.618 sits at 28.2K. Another target is this 0.618 trend-based fib extension from basically the lows over here to the high of 3 to the low of 4. Toggle on the 0.618 and you will find this sits at basically 28.2K as well. So this is a very important area that we are at right now. Only a little bit of leeway till we are going to hit the high time frame range value area low as well. And in this bearish scenario, this would then be the end of this bigger wave C, bigger wave X, and we would then move down in a wave Y to much lower targets. In the bullish scenario, however, which for me is an alternative, by the way, the bearish scenario is for me more likely at the moment. In the bullish scenario, what we are looking at right now is only the beginning in a wave 1, then we have a 2, and then eventually a 3, 4, 5 to the upside. Now, looking at how this wave 5 is already developing, I would prefer that if this scenario would actually happen, I would prefer some sort of then an ending diagonal type of structure. But yeah, we have to see, because an ending diagonal doesn't go too high. Because the thing is, if we look at the size of this wave 5 at the moment, which goes basically 19.5K to where we are now, about 27.5K, this is already quite a long wave 5 at the moment. And if this is only wave 1, we then expect a wave 2, and then wave 3 needs to hit the normal wave 3 targets of at least the 1.618 trend-based fib extension from the low of the impulse to the high of 1 to then the low of 2. We are gonna go far above like 40K to the higher areas of 48K, which would invalidate the bearish scenario on the higher time frame, and actually would more like validate the bullish scenario. So yeah, it's we have to see, of course, that is very speculative because we are only here right now. But yeah, this is at least the more bullish scenario, where this then is still a wave 1 looking for a wave 2 and then wave 3 to the upside. The potential short area is entering in this wave 5 target area, which could be done as we speak. However, once again, this is a bullish environment and you have to be very safe for trading in such an environment and make sure your strategy and your entry requirements are on point. You also see a range that I have over here, which is actually important, because besides these fibs, the 0.618 as potential wave 5 targets, also this range acts as a target area for a wave 5. It's pulled from the low of 2 to the high of 4 to then the high of 1 on log scale, and the high of the channel is also a potential wave 5 target area. So that's why I have this channel on my chart on this time frame at the moment. If we then go to the lower time frames, then this is what I currently have as a bearish count, and it's almost pointless because we just go up and up and up. But in this scenario, this is a 1, 2, 3, 4, and this is only the final leg of a green wave 5. So then a 1, 2, maybe 3, 4, 5. So then 5 is almost over, and then we just go to the downside. Very short, but yeah, the bullish scenario currently looks more preferred. And when we look at the bullish scenario in this case, then this is a 1, 2, yes, but the green wave 3 is not yet finished. While in the other scenario I just showed that green wave 3 is here, green wave 4 is here, and then this is the green wave 5. In this scenario, however, that is not the case. In this scenario, we have a 1, 2, and then a 1, 2, 3, 4, 5. However, volume is very, very important in Elliott waves. And when we look at the volume of the blue count at the moment, this then being 1, 2, 3, 4, 5, you can see that this move to the upside over here actually has, over here, a higher volume peak sitting at the highs compared to the highest, well, if we disregard this bearish peak over here, but the bullish peak, compared to this bullish peak, this peak is actually higher, which also makes me think that this blue wave 3 is not yet finished, or might be finished somewhere soon over here. So we're going to extend this wave 3 even further. So then wave 3 somewhere still to end. Then we have the blue wave 4, and then we're going to range for a while, because they have a 3, 4. Then you have a little bit of a 5 ending 3, and then another 4, and then you have 5, which basically is going to look like something like, okay, we have this wave 3, right? And then the end of 3 is in, then we get a 4, then we get a 5, then we get a 4, and then we get a 5, and then you're finally going to turn around. So this might look like maybe some sort of a diagonal. It might look like a range. It can have many, of course, different patterns, but it is important to at least keep in mind that it might be very rangy. And the moment we are going to start in a very ranging environment, we might think about, hey, these might be some 4 and 5s being pulled off at the moment. So a potential trading setup actually just passed already. For me, it was at nighttime over here with the low that we made. We had some bullish divergences as well, by the way, between this wick low, this red candle, as well as this one over here on the CVD. If I show you over here, this is the CVD. You can see this is the candle, and then between this candle, you can see the yellow line over here has a low. This one is lower, so we have a lower low on the CVD, higher low on the chart, as well as the blue line actually the same. So that could have been a potential like trading setup at Elliott Wave wise, but yeah, it just, of course, it keeps pumping. We don't really know where wave 3 is going to end, so as long as we don't really get a solid range, it's very difficult to then provide a bullish trading setup. So yeah, I hope this video was helpful for you or valuable to you. Thank you for watching and subscribing, and I see you at my next update video at 1 p.m. Central East European time. Bye bye.